Welcome everyone to Enterprise.expert, a community of experts in enterprise level technology. The monthly webinar for today is QuickBooks Enterprise for construction and contractors. This is the September edition of our monthly webinar. We will spend about 5 minutes just talking about the introduction, what is Enterprise.expert, and some of the recommended events, additional recommended events. We'll spend about 10 minutes discussing pretty much conceptual topics, construction accounting topics, and that would basically set up the premise, for what we're about to do, and demonstrations inside QuickBooks Enterprise for construction and contractors. That should be about 40 minutes, and then Q&A 5 minutes. The webinar should take no more than an hour. If it does go a little bit long, then maybe 10, 15 minutes max, but normally it doesn't run any more than 1 hour. Anyway, the webinar, somebody's asking if what we're about to cover works in QuickBooks Pro or only in Enterprise. And basically, I will tell you what's Enterprise only. For the most part, I'll be working in Enterprise, but what I will tell you which features are only Enterprise, only available in Enterprise. Anyway, who is Enterprise.expert? As I mentioned, community of experts in enterprise level technology. We do monthly webinars. If you're logged in now, you're obviously attending the live webinar. We have our website and blog, which is still under construction. I'm still finding time to put that together. But just go to enterprise.expert, no www, no .com, one of those new fancy domain names. And the Facebook group. I think the Facebook group is probably the most valuable piece because we can continue the conversation and ask each other questions in it. And I also have a Twitter account, ENTERPRISE.expert, if you want to tweet to us or at us. Anyway, why enterprise? Why focus on enterprise? And why do this enterprise expert community? Well, by enterprise, we're talking about medium-sized businesses, more of the established businesses with proven business concepts that rely heavily in technology. So this is what we're trying to achieve, is trying to give enlighten people with the technology that's out there for all enterprise, or what we call enterprise. Now, by technology, I'm more specifically talking about hardware and software, cloud-based solutions, ERP systems, database systems. For the time being, we're 100% focused on QuickBooks Enterprise because that's one of my fortes. But once we start getting more community members involved, more experts involved, we'll start bringing other experts in other areas that I think could also enlighten us and help us look at other things other than QuickBooks. So that's kind of the end goal there. Again, to engage with us, the best way is to attend the webinar live. We may have a special episode from time to time that's sponsored. We haven't had any yet. We just had the regular monthly webinars. We don't provide CPE for public accountants or ACE for advanced pro advisors. This is not targeted towards educating accountants, although accountants are obviously welcome. But this is more to educate the general public on enterprise level technology. As I mentioned, for the rest of the year, we're doing only QuickBooks Enterprise topics, but hopefully next year and so, as we get other people involved, we'll talk about other technologies as well. My name is Hector Garcia. I'm the CEO of Garcia CPA, which is an accounting and integrated technologies consulting practice, and I'm a reseller of QuickBooks Enterprise products, which is obviously one of the reasons why we're focused on that heavily, because that's the primary product that I work with. I'm an advanced certified pro advisor, and there's my email if you need to get in touch with me. Another recommended event, webinar, it's tomorrow at the same time, 12 p.m. Eastern. We will have a webinar through QB Power Hour on what's new in QuickBooks 2017. So we'll cover all the new features of QuickBooks 17 on tomorrow's webinar, which you have to register if you're not already part of the QB Power Hour family. Just go to qbpowerhour.com and you should be able to register for that. Anyway, let's jump straight to the first piece of content here, which is construction accounting concepts. So it's really, really important that if you are working with any accounting software, especially QuickBooks, to run your construction and contractor business through it, it is important that you determine and establish upfront what is the accounting method that you're going to use. So the first two, the cash basis and the accrual basis, they're the standard accounting methods that any business other than construction would implement. Basically, with cash basis, all the expenses are accounted for as they're paid, and all the income is accounted for as you collect it. So there's no need to use any balance sheet, no accounts receivable, no accounts payable. Cash basis means if you paid it, it's an expense. If you got paid, it's income. And you could even apply it to construction. The IRS may say otherwise based on your company size, but you could do that. And that's not the point of this webinar. We're going to talk about the proper ways to account for it. Then we have the standard accrual basis, which basically means that we account for expenses when they're incurred. That means whenever you get a bill and you recognize that that's a real expense that was already provided, the service was provided, or the product was provided to you. And income is recognized as is earned, quote unquote, whenever you have an invoice that is triggered by a contract. So most smaller construction companies would either go with cash basis or accrual basis, and that's it. They don't really overthink it. However, because the IRS requires that if you are not, quote unquote, a small company, a small contractor, with under $5 million in revenues, you may have to account for them in different methods. And the methods that you have to use are either completed contract method or percentage of completion method. And these are the two construction accounting, official accounting methods that you can use. And these are the two that I'm going to explain through QuickBooks Enterprise. We'll explain the concept of how each of them works. So we'll start with the easy one, which is a completed contract method, and then we'll move on to the more complex one, which is the percentage of completion. And the difference between them in a nutshell is that with completed contract, all income and expenses are managed through the balance sheet, which basically means we don't recognize the income and we don't recognize the expense until the job is 100% completed. And at that point, when the job is 100% completed, we basically transfer that money that's sitting there in the balance sheet and transfer it into the profit and loss, into the income statement. And at that point, we will recognize the income and obviously pay the taxes then. Now, with percentage of completion method, it's very, very tricky. There's a lot of moving parts, but basically says that we will recognize income based on the completed portion of the contract throughout the project. And this is really meant to, and I guess I misspelled one of these words. Could have just used a spell checker there. So throughout the project, and is driven by the actual cost compared to the estimated cost. So in other words, we estimated that a project will cost 100,000, and let's say we're going to charge 150,000, but we think the job is going to cost 100,000, and we have spent on that job 80,000 so far. That means that 80% of that job is quote unquote completed, and I'm doing air quotes here. I see that my webcam is not on, but I meant to say, quote unquote completed because of the percentage spent based on the estimated cost, the original estimated cost, and that's why estimates are so important, and we'll discuss that. So, completed contract method will be the first one we'll do, and then percentage of completion will be the second one we do. Now, the ultimate goal is for me to convince you to use QuickBooks Enterprise and percentage of completion method, because it is the best way to track your finances internally. It is the only way the IRS will accept it for large contractors, and is the only way that most bonding or insurance companies accept it. And even some governments require you to send them a work in progress report for you to even bid work with them. So it is the most correct, the most complete, the most widely accepted, and on the safe side, regardless of what company, construction company size you are, percentage of completion method is the best one to use. So we'll evolve to that eventually. Now, there are some general guidelines before we jump into the product. General guidelines is, number one, you must use a job for each project, and there are specific reasons for that. But we'll get to that. You must have an estimate. You must have an estimate for each project with the internal costs and the markup, or the budgeted costs and the markup. That way, there's a clear distinction between what I'm charging for the job and what I think or I'm projecting that I'll be spending on the job. Now we must assign every direct job expense or allocate indirect job expenses, and we'll discuss that as well, if they're budgeted for the estimate. So it's really, really important that after we budget for that, that we actually assign those or job cost those, and because that's the only way we're going to get the proper reports. The fourth point here is you must use items. You have to use items. You can't use accounts to account for those expenditures. So really, really important. You must use items. And the last one is you should only invoice based on the proportion of income as it relates to the percentage of expenses incurred to date. What that means is we don't recognize 20% of the job because the contract says that we can get paid 20% of the job right up front, because that is not income earned. That is just a percentage of the job payment. So we'll deal with that as well, because payments have to be sort of managed separately than invoices. And that's the biggest area of confusion that most of my clients have. And obviously the reason why they value this type of training is because they tend to recognize income as they get paid. And when they get paid is normally not directly tied to a percentage of completion. The payment terms are based on contractual terms and triggers that in most cases really don't have a lot to do with how we recognize income. So income recognition, it's an accounting topic, it's an IRS topic in some cases, but not necessarily having anything to do with the contractual methods in which we get paid. So those are kind of the important points I wanted to establish. And let's go jump into the product. And I do encourage you to put questions in the chat box. Let me close this up. So if you have any questions, go ahead and ask them. I'll try to answer them towards the end, or I'll take little breaks for that. I have a feeling I'm going to have a lot of detailed questions that may not be able to cover everything. Anyway, let's start with the completed contract method. So I am working in QuickBooks Enterprise 2017. Everything that I'm about to show you in this demonstration will work in QuickBooks Pro, Premier, Accountant, and Enterprise, basically all PC versions, and probably going back to 2007 or 2008. So everything I show you are very core accounting transactions that QuickBooks has been able to do forever, but the only thing that may slightly change are some of the newer QuickBooks Enterprise features, which I'll point out. I'll say, hey, this is only QuickBooks Enterprise 2014 and so forth, that sort of thing. Okay. All right. So there's QuickBooks Enterprise on the screen, looking just like Pro or Premier. However, first step is let's go into our chart of accounts. So that's kind of the first step. Let's go into our chart of accounts, and just general rule, I want to make sure that I have an income account called construction income, and I'll use that just to recognize my construction income once it is earned. I'm going to go ahead and just kind of go out of the way and put here earned in parentheses. That way we have a very clear distinction between what's the construction income that I have earned and the project billings that I have unearned, and we'll kind of flow through those. Let me go ahead and delete these other two income accounts that are here because I really don't need them, and I just want to have as little accounts as possible to make this very easy to understand. Then we have two major cost of goods sold categories. We have the job labor costs and we have the job related costs. Okay, under job labor costs, there's a whole bunch of accounts here like direct employee benefits, payroll, job labor, workers' comp. For now, I'm just going to focus on labor when we do the payroll piece. And then under job related costs, I have allocated internal equipment. That's when we actually add a piece of the expense from the internal equipment into the job. Then general direct costs, these are for the ones that we couldn't really break down in a very sort of minute detail item level. Then we're going to have our materials, we're going to have our rented equipment, our subcontractors, and of course you can have a lot more if you want to, but this is just a general way we're organizing them. Now let me go over to the item list, okay, because the item list also has to be organized a certain way. And I have a group of items here. So let me show you this first group of items in the top, the ones that I didn't add the word WIP. These are the ones that I'm going to use for the percentage of completion method. And then the ones here in the bottom, all the ones that have WIP in it, I'm going to use these for the percentage of for the completed contract method. So I basically have both in here. So let's start with the completed contract method. I have a couple of items here. I have working process subcontractor, working process material, working process equipment, and working process labor. And I got some sub accounts there, which I'll show you. That's kind of a trick of the trade on how we can use sub items to give us much more details on the reports. But for now, the only thing that we're really worried about is this four big categories here: labor, equipment, materials, and subcontractors. The other really important piece is I have another item here called project billing, which I temporarily pointed into this unearned project billings account. We can argue till Tuesday whether that should be an income account or a liability account. Let's not worry about the mechanics of accounting for now. Just make sure that we know it's going to a separate account that we can track separately. And then I've created two groups here. You really only need one group, but I created one group for the completed contract method and one group for the percentage of completion method. So basically, when I created a group, what I did was I created a group which I called it contract, and then I added all the items that are supposed to be in a group. The purpose of this is so I can have my estimates pre-populate every single item that could possibly go in the estimate. And of course, you may have a lot more than that in your company that you'll be working with, but I'm just going to be working off these four items here. Now, the other really important thing here is this little checkbox that says print items in the group. We cannot have that checked. So we have to uncheck it because it will confuse your client big time, or whoever the person that you're sending the estimates to through QuickBooks, or maybe the invoices to QuickBooks, if you send anything other than one line that says pay me. Because usually in construction accounting, we have other documents that talk about payment methods, payment terms, payment triggers, conditions, and details of the job. So in QuickBooks, you don't want to track those externally. You want to track them internally, but not externally, because it may just confuse your client. And a confused client is just a client that's going to delay payment. So anyway, all right. So I got my group there, which is what I'll be using. And then we're going to start with creating an estimate. So I'm going to create an estimate, and as I mentioned earlier, you must have a job for every single customer. So I'm going to have this company here. Let's say, for example, this company here called ABC Contractor, which is another large contractor that we do work for. Let's say we're subcontractors for them. So naturally, they're going to be the customer because they're the ones that get the invoice. They're the ones that get the statement. However, internally, I have to track each project, each job separately. So I'm going to go ahead and create a job, and I'm going to do it right here on the fly, simply by just putting a column there. So I'll just type a column right after ABC Contractor, and basically that enables me to start using sub-accounts. And then let's call this one the Honey home, right? So let's say, for example, we're constructing a house for somebody named Honey, and then we're creating the job right up on the fly, okay? Then over here under date, I'm gonna put here today's date, because that's when we are estimating the project. We're estimating it for today. And then I'm gonna go onto item, and then I'm gonna use that group, because that group was the key element of everything. That way it makes my data entry process much faster. So I'm gonna pick this contract CCM, which is going to automatically populate all those items that I previously set up. Now, another really important thing is that in QuickBooks, in the estimate, we need to have a column for the estimate, a column for the markup. And if for whatever reason you don't have that as default, so in this particular QuickBooks file, like this is a good example. So in this QuickBooks file, it just shows me cost, quantity, and revenue. And on a different template here, it shows me estimate and markup. So just to show you real quick, you just go to formatting. If you happen not to have it in your QuickBooks file, you go to formatting and customize data layout. And then under columns, we're going to make sure that the cost and the markup are both turned on. Okay, these two have to both be turned on in order for this to work. And this is the single most important basic element. If you can't get past this, then you're screwed. Because if I can't internally estimate my project cost in my original estimate, in my quote, I can't get any reports. Anyway, so let's say, for example, that for this particular project, we're estimating that we're going to rent out in equipment, let's say, for example, $2,000. And then we plan to mark that up another 25%. So I just type 25% and then hit tab, and QuickBooks will automatically add the $500 on top of that. Let's say in materials, we are going to spend about 50,000, and we're going to mark those up. Let's say for materials, we have a different markup philosophy. We'll mark them up 15%. And then under subcontractor, let's say we went out and we quoted our subcontractor, and he quoted us 22,500 for the job. And for subcontractors, we marked that up, let's say 50%, right? So obviously all that stuff, it's up to you, how all that stuff works, but the markups are obviously internal procedure only. So under labor, let's say that we're going to do this per hour to just make it easier. Let's say that we think that we're going to spend about 200 man hours, which cost us roughly about $27 each. And then we're going to mark those up 3 times. So we'll do a 300% markup. Okay. So at that point, the pricing structure when it comes to my internal cost and in this case, this would be my profit, will give me a final price, which is down here in the bottom, of $115,530. Sometimes you have to reverse engineer these, as most people will do those estimates on an Excel spreadsheet or some other software, and then reverse engineer the cost into it. You can do that as well, but it's really important that you have a markup, and it's really important that down here that this means something. Now, why is this so important? It's because this number, 79,000, divided by this number, right, gives me my percentage of profit. And my percentage of profit is the amount, right, that I'm going to multiply times the income as expenses start being incurred when we actually start discussing different accounting methods altogether. But it's really important that we have and understand that markup, because that's going to drive all of everything, reports, everything. Okay, so perfect. So we did the estimate. I'm going to go ahead and hit save and close. And then we get started by looking at the most basic report, which is reports, jobs, time, and mileage. And we have our jobs estimate versus actuals detail. Most basic report, most important report, and this will be our starting point. Now, for this report, I'm going to go ahead and choose my Honey Home job, which is the one that I'm going to do, and then hit OK. And then I have my starting point, which basically tells me exactly, this is my Bible for every job. So this will tell me exactly what my costs are supposed to be and what my estimated revenue is supposed to be, and then we'll work from here. So as we start performing the job, we're going to start paying some of our subcontractors. So for example, let me go ahead and create a bill for one of my subcontractors. So let's say I have a subcontractor here. And as I mentioned earlier, you must use items, right? So I have to use the item side. Don't be tempted to go into expenses and type subcontractor. Don't do that. It's going to screw up your job costing. You want to work of items only. So of items only, I'm going to go into my work in process subcontractor. And I strongly recommend that you actually, if you plan these jobs ahead of time, especially when you bid internally, subcontractors and materials, let's say you bid everything internally. If you're a general contractor, you want to create sub-accounts for each of those vendors that you're subcontracting or suppliers that they're bidding the materials, because it makes it really neat for the reporting later on. So basically, we're going to pick this WIP subcontractor, and then we'll add the sub item there by putting the column, and then we'll type here Z contractor. C contractor, okay, and then I'll create that as a service item. I have to make sure that this hits my expense account, which in this case is going to be a subcontractor account, right? And then it hits my income account, which is going to be my earned construction income. So we'll understand that later when it comes to percentage of completion, right? In terms of what's cost of goods sold and what's income. However, keep in mind that we're working the completed contract method, which works in WIP, the work in process. So anytime you're dealing with a completed contract method, we probably don't want to do this. This is the normal instinct for us to go straight to the cost on the cost side and the income on the income side. We want to go into our work in process account. So for example, I created a work in process other asset account called WIP construction. And this is where I want to send these things because under the completed contract method, I don't want to hit my profit and loss until we actually complete the contract. So for the time being, we're going to send everything to the balance sheet. Anyway, so there's my bill for my contractor. Let's say my bill, they're billing me a portion of the job, so they're billing me, let's say, 6,000, and I'm going to go ahead and select the customer job. Really important piece. I have to make sure that I pick my customer job there. That way it gets job costed and it gets included into my reports. So I'm going to pick there, Honey Home. And then I don't have time to discuss the whys behind it, but just make sure that you always uncheck billable. Okay. And in a nutshell, we already have an estimate for it. We don't need to invoice our client separately for it. But this sub item here called C contractor, I'll show you in the next example why and how this is really powerful. So let me go ahead and hit save and close. And now as I follow my report, I have a percentage of my expenses spent so far. I have $6,000 of the $22,000 have been invoiced by our vendor. We have created a bill for. Now we haven't paid it per se, but that's actually irrelevant. It's all about when it's actually been invoiced and when the expense has been incurred. Now, if you don't want to see all those subs in there, you can simply just collapse the sub item or click up here where it says collapse, and then you can hide them. That's why I'm not terribly worried about those sub items cluttering that report, because at the end of the day, I'm going to work with collapsed items anyway. So let's talk about the materials. But now I'm going to show you a different way to manage the purchase of materials or the request for a subcontractor, whatever you want to call it. We're going to do it from the estimate and by using those sub accounts. So I'm going to go into my customers, go to create invoices. I'm going to go back into, create estimates. Let me go back into that original estimate, because you're going to have to go back to that original estimate all the time. And just instead of having done this so quickly before by just using a generic sub item, I'm actually going to break down where I'm going to get the materials from. Now, again, this only works if your construction company does this level of planning before a job, where they actually bid out the material cost, or they actually get a quote for the material cost for every job. So let's say, for example, I'm going to get materials from two places. So what I can do is I can just insert a line. Okay, so I'm going to insert a line right there. And that way I have two WIP materials. And then I'll go ahead and copy this line and paste it right on top of it. That way I have two WIP materials. And I'm going to create a sub item for each WIP materials for the vendor. So I'm going to put here car building supplies. And then I'm going to put here Home Depot. And then let's say for this one, I'm going to spend $20,000 with this supplier. I'm going to spend $50,000 for this supplier. Now, the reason for doing a group, right, and inserting the lines within the group is because if I ever need to show this to someone, when I go back and preview it, I'm just going to see the lump sum. I am not particularly worried about okay, I'm sorry about that. So I'm not particularly worried about the details behind it, because that's not how we're managing our relationship with our client. This is just for internal accounting purposes. So I'm just going to put a description there, because obviously let's have complete project as per contract or something like that. Okay, that would probably make a lot more sense than just having a blank there. So let's preview that again. Oops, let me save it. That would be useful. And preview that again. My description goes. Anyway, so I should have put that description at the beginning with the group. But whatever I put there in the description, actually it's not there. I put it in the wrong spot. There. Sorry about that. So when I do a preview, There it is, completed project as per contract, and then none of the details are important to the customer, right, to the end customer. But internally, I created these two working process materials, and I made the sub accounts for them. And I'll tell you specifically why. I'm gonna hit Control L real quick so it goes into my item list, and I'm gonna edit one of these sub items of working process materials just to show you why I'm doing it. And notice that I put preferred vendor, car building supply. And then I'm going to show you the same thing with Home Depot. Right click on it, and then I got preferred vendor Home Depot. Now you may start thinking, oh, I think I know where he's going with this. That way I can, when I actually convert this into a PO, they become really, really useful. Now let me show you exactly what I mean by that. So let's say, for example, I am now going to go order my materials through Home Depot. So I basically just go up here to where it says create purchase order. So I'll go to create purchase order. I'll hit yes here, no to the change order description. And then it says create a purchase orders for all the items or create a purchase order for the selected items. And I should do this step by step. So I'm going to pick selected items in this case and hit OK. And then it's going to give me sort of my menu of my estimate. And then I'll pick just Home Depot. So I'll just put a checkbox right there in Home Depot. And then I hit OK. And guess what? It's a beautiful thing. My PO gets created for my vendor Home Depot because I put that as a preferred vendor. And the original cost that I put in my estimate passes through the purchase order. Now, I think QuickBooks Pro and QuickBooks Premier don't pass that rate, that internal rate. I think only Enterprise does. So that's an important reason why maybe consider QuickBooks Enterprise. Now, the other really important piece is right here where it says customer, Hani Home. Now, with Home Depot, although the order is for 30,000, we made internal arrangements with them that we are going to receive materials in 3 phases, and they're going to invoice us in 3 different dates, and we're going to have terms as well. So the way we normally manage something like that, which is actually very common, is first of all, I create a custom field for bill date and payment date. And this comes really handy on reports later on. Let me show you what I mean by that. Let me go into my item list. I'm going to right click and edit the item. And then I'm going to go into custom fields. And then I'm going to create custom fields here under define fields. I'm going to create one called bill date, another one called pay date. So I'll create 2 custom fields. In QuickBooks Pro or Premier, you can do that, but you will have text lines. But in QuickBooks Enterprise, I can actually specify that they're going to be date format. That way I'm forced to use a specific date format, which comes useful later on for sorting and organizing. So the reason for creating those custom fields there is because in some cases I will have one lump sum order to Home Depot, but I may get them in pieces, or I may end up paying them in pieces. And for cash flow management, it's important to know that this entire purchase order is not due. Only a portion of it may be due. So anyway, so the way I would do that is I would copy the first line, paste the second line, and then paste the third line again, and just change the quantity on each one. So let's say, for example, on my first delivery, I'm going to get about half of the order. On the second delivery, I'll get a quarter. And the third delivery, I'll get a quarter. And then I know that this bill is going to come in right now because I just ordered that material or that portion of the material, and they're going to give me 30 days to pay. So I'm going to put 10, 20, 2016. And then let's say the second chunk of materials, 10, 20, 2016. Oops. Okay, that's good to have those special limitations there to make sure you put the complete date. So let's say this set of materials is going to come approximately 10/15/2016, and it's going to be due 11/15/2016. And then the last piece of materials will come about 15 days later. So I'll put 11/01/2016, and the due date will be 11/30/2016. This stuff is going to come really useful. Trust me, once we get to the reports, you'll see exactly what I mean. So this is my one purchase order to my one vendor. It's all for the same project, and it's broken down based on when they're delivering it, when they're going to bill these but it's important to put the entire purchase order on, because there's another report called the committed report that I need to know and understand that these costs have already been planned for, and these costs have already been projected. So this is why it's so important for us to create a purchase order for the entirety of all the expenses that we plan to spend on this job. That way we know and we are organized in terms of when this is going to be done. Now, another important thing here is under the header, there's a field here called delivery date, because we're not really doing any product, any inventory type of transactions. Then what I like to do is change that from delivery date to estimated project completion, and I just put here my project completion. So let's say, for example, this project is going to be completed on January 10th. So I'm going to put there that date. That way I can use that as a reference point of that PO, so I know that although I'm receiving different portions of that service or product through the month and paying them, it has to do with a project that is probably going to be recognized in 2017, not 2016. So I'm going to go ahead and hit save and close. Okay, and then I'm going to go ahead and create a bill for that portion of the Home Depot PO. So I'm going to go into vendors, enter bill, and then I'm going to pick my vendor here from the drop down list, or type Home Depot if I know the name of the vendor. And then I'm going to click yes to get the bill from a purchase order. This is obviously after you send the purchase order to Home Depot and after the materials have been delivered to the job site or to your warehouse, whatever. We're going to select the open PO there. Okay, that way we can work with that PO and the open purchase order reports. Hit OK. And then from here, I have two choices. I can say, well, that second phase is not going to deliver yet, so I'll just put a 0. Okay, so I could just do that. I can just put zeros on those two phases that are not going to be billed yet, or I could simply just go to the edit menu and click delete line, right? So you can do either or. You can delete the lines or put zeros. It will have the same exact effect. And notice again that we're using items, not expenses, and we're using the same item that came from the estimate, which means the reports are going to be good. And then lastly, we're going to make sure that we don't mark it billable, because we're not going to invoice our clients separately for this. Then I'll put my vendor's invoice number, and then I'll put my terms. Here's the net 30. They're going to give me 30 days to pay, and then I'll hit save and close. Okay, so let's go back to my Bible, which is my estimates versus actual report, and start seeing that out of my $50,000 in materials, 15,000, let me make the font bigger here, 15,000 have already been incurred as an expense. And if I happen to open that sub amount, I can actually see it at the vendor level. And trust me, most QuickBooks users love this, because this report normally doesn't give me enough information if I don't know which specific vendor I'm using, especially for the type of contractors that do a lot of subcontracting and control, or want to have control over the subcontracting over that. Now, I'm going to go ahead and click on Customize Report in the top left here, and I'm going to hit this little checkbox here where it says percentage difference. And also, to just kind of get rid of the noise, I'm going to get rid of all the revenue stuff. That way I'm only looking at all the cost, okay, information, and then I'll hit OK. Okay, so now we're narrowed down to a little bit less information. But then what really matters here is that we have a number here. We have 73.7. What is 73.7? That is the percentage remaining of expenditures compared to my projected expenditures that you have left in order to, quote unquote, complete the project. Now, because we don't know what surprises are going to come along later on and that sort of thing, okay, then we are going to assume that percentage of completion, it's the law and it's the key, and that's what we're going to use. So that comes later on once we do a percentage of completion method, which we'll do briefly. We're almost there. Okay, let's go ahead and do the purchase of the equipment. So let me enter a bill. And let's say we're going to Sunbelt equipment, okay? And as I mentioned before, I find it to be much faster to start from the PO and create the POs. From the estimate and create the POs from there. But for the interest of time, let's go ahead and pay all of our expenditures. I'll do 2,200 on this one. It happens, right? Sometimes we end up paying more than what we're projecting. Okay, so now we start winding this down. Let's pay the other. Let's get the bill for the other contractor, or for the same contractor for Z. Let's get it for the difference. So this time around, C contractor. This time around would be 22,500 minus the amount I already invoiced. I already got invoiced for. Okay, and then we hit save and close. There we go. So now we're getting closer to that 100%. Okay, so what ends up happening now, I'm not 100% there yet, but what ends up happening now is when I pull my profit and loss, okay, and let me date this 2016 here. So 12/31/2016. I have no income, I have no expenses. Although I did have all these bills that presumably were income or expenses, I have none of them right now because everything it's in the work in progress. So let me see what I mean by that. So let me go into reports, company financial, balance sheet standard, and then we'll date this 12/31/2016, and we'll hit refresh. And there's work in process construction. Now, if I double click on that 26,000, I'm going to see every expenditure that I have, and notice I have other jobs there as well. And I could break these down by clicking on total by customer, and this would actually tell me that out of the 26,000, we have 39,700 on the Honey Home, okay, and we have a negative 13,000 on the school expansion, which basically means that project has been completed because we have some profit already. That's already at the profit level, and the remaining balance is 26,000. So speaking of transferring that income from the work in progress into the profit and loss, let me show you with a different job. So for example, we have this job here is an entirely different job that I had done beforehand. We had this job here that we invoiced. Let me go ahead and delete this for a second. And let me go into the original estimate because I want you to see the original estimate. Here it is. Where is my original estimate? Customers, create estimate, find school expansion. There it is. Sorry about that. So let's say this is the original estimate, and all of these expenses have already been spent. The job is completed, and we invoice our client. We're fully paid, but the stuff is still sitting in the balance sheet. Okay. So let me go ahead and invoice this so I can have my invoice. So I'll create the invoice, and I'm going to do the entire invoice here for the entire amount. I'm going to hit save and close. And then I'm going to go into my profit and loss. Okay, I still have unearned revenue because I still have no earned revenue because in my balance sheet, everything is sitting in my work in process construction account, and it now has a negative value. That negative value will represent the profit on the job. Okay, if there's a positive value there, then that would be a loss on the job if you actually have a loss. If you have a negative value, that would represent the profit on the job. So if I actually go into reports, job time and mileage, job profitability detail, and I pull that particular job, the school expansion, and I hit OK. Okay, let me see where I am on that one. Let me see where my expenditures are. Give me 1 second. So there's my bills for school expansion. There we go. Okay, there's my bill for the school expansion. And then there's my invoice for the school expansion. And then there's my bill for the school expansion. Okay, so let me pull that again. Reports, job time and mileage, job profitability, job estimates versus actual detail. I'll pull my Honey Home. Okay, that's the first one that we were doing. And then the next one was reports, job time and mileage, and then job estimate versus actual detail, and I pull my school expansion. There we go. Okay. So let's say, for example, this job has been completed. Okay. So we'll forget about the percentages for a minute, but let's say this job has been completed. And there's two key numbers that we're looking at here. Here's our actual revenue, and here is our actual cost. So what we need to do is we need to now transfer. This is after the job has been completed. We need to transfer from work in progress into the profit and loss. So from the balance sheet into the profit and loss. So what we're going to do is we're going to just do a journal entry. Okay. So we'll do a journal entry for those two amounts. So let me keep this report here. That way the numbers are handy. And I'm going to go into company, make journal entry. And let's say, for example, this was completed December 10th, 2016. And I'm going to go into account. In this case, I don't need to use items anymore because this is post completion of the job. So I'm going to go into my construction income earned. And I'm going to put here under the credit my income. So 107,885. And then on the second line, I'm going to go to my job costs. So I'll just use this general direct cost expense account here, or cost of goods sold account, and then put there the 24,250. Okay. And then on the third line, okay, that's going to hit my work in progress balance sheet account, work in progress construction. And the most important piece is under name, I must put school expansion there. Okay. Because that's the only way I'll know exactly which job I'm moving from one place to the other. School expansion. And then I hit save and close. Okay, that will basically down here under where it says other item, you're gonna see now this information get populated here, letting me know that I'm actually billing for it. So I can't get rid of them just because I'm hitting the job, but this report will no longer be relevant because this is a closed job. So once the job is closed, we no longer should be tracking this report anymore. And then when I go into my profit and loss report, let's see where we are. Okay, there's my balance sheet. There's my progress, my P&L report. There's my income. There's my cost. When I go into my balance sheet on my work in progress construction account, and I group these by customer, I'm going to notice that one of these customers here is school expansion. Okay, this one here now has a running balance of 0. Okay, so now I don't have to worry about that one anymore. As a matter of fact, there's a way to get rid of them from this report. That way we're not seeing the customers that have a running balance of 0, which basically entails that we reconcile this account. So I'll show you that real quick. So we'll go into banking, reconcile. I'm going to go ahead and reconcile my work in progress construction account. And I'll reconcile it up to 12/10/2016. And I'm going to put ending balance 0. And then I'll hit continue. And then basically I'm going to take, okay, all of the expenditures that have to do specifically with only with the school expansion. So none of the honey home stuff. So all the school expansion, and then all the school expansion, both on the income and the expense side, will render a difference of 0 because I did that one journal entry to move it out. And then when I click on reconcile, it's going to now mark those transactions cleared. So then simply when I look at this report and I look at all these check marks, I know that this job is completely cleared and I don't have to worry about the running balance for this job. And I can simply hide it by clicking on the customize report button and then go down here to filters, go to the cleared filter, and then hit cleared no. That's the key element right there. And then we hit OK. And then that way we're only focused on looking on one particular, only the active jobs in this particular case. So for now, I'll memorize this and call it open jobs with something like that. Yeah. So that will help me with that. Okay, perfect. Okay, that's just a little trick of the trade there. A lot of people don't really know that. Somebody says that a $0 check could also work instead of a journal entry to move the cost out. Yeah, the answer is yes. So if you wanted to use a check where you take positive numbers and negative numbers and use that as a job costing element, you can do that too. But I like the journal entry; just makes it a little bit easier, at least for training purposes. It makes it a little bit easier to show. So thank you for that question. So that is the completed contract method. Hope that there was something interesting on that. Let's now talk about the percentage of completion method. Okay, this is a little bit more in depth, a little bit trickier. This demo should take about 10 minutes or so. We won't cover any of the basics, but we'll cover the entire procedure. And with this, we will finish the webinar, and hopefully you'll learn something interesting. All right, so let me close what we have open here. I'm going to leave my profit and loss reports open. Let me close everything else. I'm going to leave my profit and loss report open, just closing everything else. Okay, there's my profit and loss report. And then let me show you how the percentage of completion method works. So normally with percentage of completion, I work a little bit different. The items that I use, I don't point them into the work in progress account. The items that I use, I actually point them into, as I mentioned earlier, into the specific cost of goods sold account and the specific income account. I also didn't mention that earlier. It's really important that the items have this little checkbox here. That way it's enabling both the expense side and the income side, because if I don't have the little checkbox, I'll be sending everything to cost of goods sold or to income, and it's going to net, and it'll be really ugly. So I want to make sure that I put that little checkbox there, and I have the opportunity to tell it what's expense and what's income. So I'm going to go ahead and hit OK. And then let's go ahead and do an estimate. So let's do a new job. Let's do under the same contractor. Let's do a new job. Let's call it Commercial Plaza. So let's say we're doing an expansion to the Commercial Plaza. And then I'm going to pick my other group that I pre-created, this one called Contract PCM, which is going to contain all the items that I pre-created. And then, of course, I'm going to now break down my cost per subcontractor, per material, per provider, as I mentioned earlier. So we're going to use, for this one, we'll use car supplies. As I mentioned earlier, I really like going this route. Okay, so I'll create a sub account under it and then follow the same procedures. Put the materials account and then the construction income account. And then for the subcontractor, I will pick, let's say, Stevens Cement. Okay, make that a service, hit the little checkbox, make sure that I put here job costs, subcontractors. Here where it says preferred vendor, I'm going to select the vendor's name. That way I create those POs directly. I'll pick here the construction income account. Okay, and then I'll hit save and close. Okay, and then we won't have all those in detail there. And this will have, let's say, a rented equipment. So my materials from car are going to be, let's say, 100,000, and we're going to put a 0 markup on that. My subcontractor expense will be 60,000, and I'll put a 0 markup on that. Labor is going to be about 24,000. I'll put a 0 markup on that, and rented equipment would be 12,000 with a 0 markup on that. And then I'll go ahead and insert. I'm going to go ahead and insert a line here, and I'm going to use my general one where I'm going to put all of my markup. Okay, so let's say, for example, in my general line, whoops, I just noticed I was putting everything under quantity. Yeah, so sorry about that. This should all be under the cost. Just wanted to make sure that you were paying attention. Okay, then here under markup, I'm going to put completely separate the amount that I plan to make on it. Now you could use individual markup per line item, or you could use this method, which basically just puts in how much money you want to make on the job or your profit on the job. So we're just gonna put a flat 75,000 in there. That way it's 271,000 job. I'll put here on the estimate complete contract. If I preview this, my customer just gets complete contract 271. Really nothing else that they need to do about that. And then here under the third line, I'm gonna have another item which I call it project billing, and we'll discuss that. So on the project billing, on the memo, I'm gonna put here total project 271,000, and then under dollar amount, I'm gonna leave it at 0, and under quantity, I'm gonna put 1, and I'll kind of show you how that works. But let's say, for example, that my billings are gonna be done in 3 phases. I'm gonna bill 25% upfront, and then I'm gonna bill 50% on completion, and then 25% after inspection. Okay, whatever it is. So this is what we call the payment triggers, which has really nothing to do with revenue recognition. This is just a verbiage, it's just explanation for me to remember and know exactly what's going to happen when I start invoicing. Okay, and then the quantity should be 1. Okay, so I'm going to hit save. Okay, and then I'm going to start creating my POs. So I'll create my PO for a selected item in this case. So I will do my PO for car. Okay, and bill date, let's say we're going to get invoice for this on October 1st, and then they give us 30 days to pay, so I'll put there 10/31/2016. And then the purchase order really has today's date on it, so I can still have a purchase order date. And then let's say this project is going to be completed on February 28th of next year, so I just kind of like to keep track of that date on my POs, and we'll get there. Okay, and we're basically going to run about 50 minutes long, so if you have to go, I understand, but we need another 50 minutes to complete. All right, so there's my PO, and this would be for car, and as long as I had that preferred vendor and the item, that will come in automatically. I'll hit save and close. Let me create my PO for Steven Cement. So I'll pick the selected item. There you go, Steven Cement. Hit OK. That should be done for me automatically. Let me go ahead and so Steven Cement is going to send me the invoice somewhere around November 5th, and they will give me 10 days to pay. So I'll put there 15/2016. So that's really, really important for planning your payments, and we'll get there. I'm going to show you a report where this stuff comes into play. So I'll do save and close. And then rented equipment, let's do that PO. Okay, so let me do it for rented equipment. And then we're going to Sunbelt equipment, and again, repeat the project estimation date in there, and we're going to get that bill right away from them, and they'll give us 60 days to pay. So I'll put there 11/20/2016. Perfect. Okay, so I got all my POs set up with the exception of labor, and general is not going to get a PO, and labor is going to be run through payroll. Okay, so let me go ahead and hit save and close, and then let me run payroll real quick. And I can't really get into heavy detail in the payroll procedures, but we'll just run one paycheck here to show you the concept. So I'm going to run one paycheck here. Let me run an unscheduled payroll, and I'm going to run a paycheck for this employee, and I'm going to go ahead and job cost his stuff to just one job. So let me just delete all this stuff here. Okay, and again, I don't want to get too much detail on the procedures of payroll, but I just want to show you that I'm going to go ahead and job cost his payroll. So I'm going to pick his item. Let's say he's got one of these items designed, and we pay them, let's say about 10,000. And we're gonna pick the job. So that's the commercial plaza. And then the service item, really, really important. This is how we're gonna tie this to the estimate afterwards. So then we have to pick this labor item that's in here. Really, really important. Labor. Okay. Now, normally you would have a timesheet, and then through the timesheet, you would run all these things. And again, I don't want to get into much detail in terms of the taxes and stuff like that. We're just going to go ahead and create a paycheck for him. Okay. That way, that shows up in my job cost report. Okay. So we'll hit continue and create paycheck. See. Oops, I don't know what happened there, but let me do it again. So we said it was 10,000, and the customer job was commercial plaza, and this was labor. Okay. Save and close. Create paycheck. There you go. Okay. So let's start looking at our profit and loss report, see how that looks like. So right now, for the time being, and I'm going to go ahead and split this off per job. That way I'm looking at each job separately. On this commercial plaza, the only thing I have so far is my $10,000 in wages. I have some part of the expenses and the workers' comp assigned to the job as well, right? And then basically my job is running at a negative. The POs do not hit us yet. So the POs are not an issue yet because they haven't been created into bills. But once you create them into bill, they will hit my profit and loss report, which I'll show you that real quick. So we go into vendors, enter bills, and then let me create one for Steven Cement, and I'll hit yes, and I'll go ahead and select the PO I had for them and receive that bill. Okay, and again, we always want to mark billable. We don't want to mark billable if we're not going to invoice our client for it. Let me take this. Okay, and then I'll hit save and close. So now you should start seeing expenditures hit your profit and loss. Now the problem with construction accounting is that we are recognizing all of these expenditures, right? At the moment, we are recognizing them as we spend them, and that's okay. That's fine. But what we need to do now is we spent already $71,000 on this job. We need to now figure out how much do I need to invoice for this job. Nothing to do with getting paid. Getting paid is a different story. To get paid, remember, we use this item called project billing. So let me go ahead and invoice my client so I can get paid. So let me send the invoice to my client. I will pick it from an estimate. If you remember, you were following along. Okay, we had an item all the way in the bottom that said billing at a quantity 1. And then I'm just going to pick that one item here. That's the only thing I'm going to use. And then from here, under quantity, I will put here 0.25, and then I'll hit OK. And then down, all the way down here, we have our item that's 0.25. Where's my quantity? I apologize. My quantity is not in my invoice template. Let me switch to a different invoice template. Okay, there it is. So there's my 0.25. And then here on the rate, I just copy and paste the project amount. So I'll put there 271,000. I have my cheat sheet basically here letting me know how I'm going to invoice for this job. So I'm going to invoice so far 25%, but that's not the revenue that I recognized. 25%, it is simply the amount that I billed. Really, really important piece is the amount that I billed. The amount that I'm going to recognize is different. So let me go ahead and hit save and close and then start seeing what this looks like. So in my profit and loss, I see my project billings unearned, letting me know that that's not my money. I haven't earned it yet, but it's sitting there. If we have some accountants watching this, they would say, well, that should be in the balance sheet. That should be a liability. Yes, for the time being, I'm doing it here just to make it easier to show. However, we need to know how much are we going to invoice, and for that we're going to use progress invoicing. But again, how much are we going to invoice? That is going to be derived of a calculation. The calculation is total expenditures versus estimated expenditures. So going back into my trusty report here, jobs, time, and mileage, and I go to job estimates versus actuals detail, and I go down to that particular job into the commercial plaza job, and hit OK. And then I'm going to hit customize report here and take away all these checkboxes here and put the percentage. That way I'm just 100% looking at the expenditure. So it looks like we have 63% of our job remaining. Now, if you do the math there, and I'll do a calculation even though we don't need one, but run the calculator real quick. If I do 63.7% minus 100%, it gives me the percentage that I've actually done so far. So what I have earned on this job is 36.3%. Now, if you're working with QuickBooks Pro, Premier, or Accountant, you have to take out the calculator and do that percentage, that conversion, right? Just convert that into the opposite to get to 100. However, QuickBooks Enterprise only has a report called the Work in Process report, which is great. The jobs, time, and mileage, and then work in progress summary. And then you can go into each particular job. So for example, commercial plaza is the same percentage that we just calculated, 36.30, and it actually tells you out of the $271 you're supposed to estimate, you have earned $98,000, from which you've only invoiced $67,000. So that stuff right there becomes really, really useful because the difference between that is the amount that it's going to be, obviously in accounts receivable for sure, but that's the amount that should show as my sort of my work in process billing, which is very different than the revenue that we recognize. So that being said, that 36.3 is sort of the magic number. I'm going to go to my original estimate. So customers estimate. And if you may have noticed, going back to original estimate is one of the most common things that we do. Okay, that's everything. Our estimate is the Bible. Okay. So from the original estimate, I'm going to go ahead now invoice, create invoice, and I'm going to invoice this a percentage. And I'm going to pick that percentage from that report, which is 36.30. And then I'll hit OK. And then QuickBooks will create an invoice that is exactly 36.3% of every single line item. This last project billing, I'm going to put this one at 0 because I want to use my original 1 as my percentage of payments, different than my percentage of completed revenue. So I'm going to go ahead and hit save and close, and then pull my profit and loss report, company financial, profit and loss, and do this by job. And let me do this for 09/01/2016 through 12/31/2016. 12/31/2016, perfect. And now you see that I see my actual earned revenue, which is $98,000. Then my unearned project billings, which by the way, they don't belong there. I'm just putting there to make it really much easier for us to see visually. And then we get to see our profit. However, if I want to know my real profit in this case, I would have to get project billings out of the way. So for me to get project billings out of the way, I just move it from an income account into a balance sheet account. So let me go into my income account. That's project billings. Change that, and I'll move that into the balance sheet somewhere. It could be a current liability. It could be a current asset. For the time being, I'm going to leave it in current asset. Just make it easier for us to see in the balance sheet. And I'll move that out of the way. That way, when I look at my profit and loss, I can see my true profitability based on percentage to completion. So I know it's pretty heavy. I know it's a lot of stuff, but it's really difficult to enjoy construction accounting without knowing the rules. And obviously, I think it's very valuable to see that QuickBooks can manage that really, really well. So let me just go through a few of the extra reports that are relevant. We had a couple of purchase orders that we created and we haven't received bills for. So the way we track those is we go to reports, purchases, and then we go to open purchase orders by job. And that's the reason why I think it's really, really valuable to create a purchase order for everything and use that estimate as the starting point. So you can see right here that I have $12,000 in which I haven't received bills for, and this is going to be part of my cash flow projection. These are $12,000 that are going to be paid to these contractors. So as money start coming in from these vendors, it's important to know from these customers. Sorry, it's important to know that I have some of these costs committed. Now, I recommended that I use a custom field. So I'm going to go into customize report, and we recommended that we use two custom fields. It was pay date and bill date. These are the ones where we put when we thought these bills were going to come in. So when we open these fields up, now it gives us a lot real interesting visuals, because I see exactly what my accounts payable is. Not my accounts payable, sorry. What my future accounts payable is, and I also can mildly project when those cash flows are going to go out based on when I'm supposed to get that bill and when the date of the payment will come into play. Okay. Now there's a couple questions here about retainage. So retainage, how would that work? Let me just minimize this for a second. And retainage is actually not that complicated. The way retainage works is when we do our invoicing, sometimes our vendors take a percentage. Okay. So let me just do another item here, and I'll put here retainage. Okay, so I'm going to create an item here called retainage, and then I'm going to send this into an asset account in the balance sheet somewhere. I should have one called retainage. There you go, retentions receivable. And then I'm going to click OK. And let's say, for example, they're going to retain 5% of this payout. So I can just type in the number there, 98,373, and then under quantity, just put 5%. So they're going to retain this, and all I have to do is just put a negative. Okay, so they're going to retain this. That means that I will earn the 98,000. However, part of it I am not going to collect yet. So that's going to go in my balance sheet. So when I click save and close, my revenue earned will still be intact. So although I'm not getting paid for it, my retainage is not penalized in here. But when I go into my balance sheet, I should now have a retainage receivable amount. Okay, and at that point, when I actually invoice my retainage, that would just be quite simple. I just do an invoice using that item, and it will reverse it right after that. Okay. All right. Let's see what else we got here. Other reports. Oh yeah, the committed reports. Really, really important. This is an enterprise, QuickBooks Enterprise only report. So when I go to reports, job time and mileage, it's called committed cost report. Really, really important. So I'm going to do committed cost by job, and then I'm going to go ahead and narrow this down to the specific job that I want to see, which is this commercial plaza. We're going to see two interesting items here. We're going to see committed costs. Those are the 12,000 that we discussed earlier, which comprise of the open purchase orders that have been created into bills. And then we have the unpaid wages. Now, those unpaid wages are actually coming from timesheets. Now, we didn't do any timesheets in here. We didn't have a chance to. But like, for example, this other job, this 54,000 came from a timesheet. So if you create a timesheet and you job cost the people's time in the timesheet, QuickBooks will calculate behind the scenes the rate times their hours and put it there. It won't calculate taxes, and that makes sense because that stuff may vary, but it will at least show you what's committed in there. So one of the really interesting parts about that is that we know what else is remaining that of a cost that we have not yet created a PO for. That's 12,000. So according to my planning, I got POs for 12,000, but accounts payable are going to be under actual cost, so we're not worried about accounts payable. So I'm going to have my accounts payable here I'm going to have my POs here. And then this is the stuff that warning, you may have other expenses because you calculated for them. And obviously, if you don't end up spending them, great, that turns into income. So the last piece is another report here. Let's see. Let's go reports, jobs, time, and mileage. We also have the item profitability detail, or the item estimates versus actuals, which is really nice because it basically ignores all the jobs and it goes across the board and it compares every single item, what we estimate and what we earn, and we see if there's a specific performance issue with one of the items. Okay. All right, let me open it up to questions. Let me see what I have here. Shouldn't you true up your income via journal entry or zero checks rather than invoicing, especially if you invoice your customer in installments? So, Karen, I don't see a reason for that because when I invoiced it, I used the item. So let me search it again. Okay. Because when I invoiced it, which is this one, when I invoice my payout, this is my project billing payout, I use this project billing item that hits my balance sheet. So there's no need to do the journal entry maneuver there. Okay. Let me see what else we have here. Retainage should go on a cash invoice. I'm not sure what you mean by that, but yeah, you create an invoice and you use that retainage item to get that back. Let me see. Will there be a recording? Yes, of course, the recording goes into YouTube. Okay. I think that's it from at least going over time a little bit and covering some of it. I don't think it's possible to explain all of the accounting nuances of construction in a 1.5 hour webinar. But yeah, but if this topic is useful, I'm sure I'll get feedback from you in terms of wanting to do something deeper into the future. Anyway, this is a good website to go to. I actually really like it because it actually explains both accounting concepts and tax concepts. And I think that when we're dealing with a little bit larger construction clients, especially the ones that tend to work on QuickBooks Enterprise, these questions are going to come up. And whether you're a tax person or not, I think it's useful for you to go to this link and read up on IRS'S version of accounting methods and construction accounting methods. It's a great guide, really easy to understand, really easy to follow. I'm going to put it in the chat box, and I'm also going to send it on the email blast that everybody gets. So I recommend that you look into that website. That's a good resource, very good resource for that. All right, so next episode is going to be on October 19th, so a month from now, and it will be new features of QuickBooks Enterprise 2017. However, on tomorrow's webinar, qbpowerhour.com, we will cover QuickBooks 2017 in general. So if you're really eager to see that, you can watch tomorrow's webinar or just wait till next month. On November, we're going to do reporting tips and tricks in QuickBooks Enterprise, management reports, most of it. In December, we'll do enhanced inventory receiving and inventory workflows. We already did an episode on advanced inventory, so this is just general inventory workflows. And then in January, we'll probably be doing importing data. Anyway, join the community by joining the Facebook group. Just search for Enterprise Expert. Continue the conversation, ask questions, help other people with their QuickBooks Enterprise and other enterprise technology needs. And email me if you want to be involved, if you want to present the topics, if you know someone that can present enterprise level technology, not just QuickBooks Enterprise, but Sage, third-party software like QCube or Fishbowl or whatever. We want to showcase all sorts of enterprise level technology. Anyway, thank you very much for joining us. Email me if you have any questions. Email me if you need to purchase QuickBooks Enterprise, of course. I'm a QuickBooks reseller. If you're a QuickBooks reseller yourself, good luck getting more QuickBooks Enterprise clients, and have a wonderful day.